Good morning. It is Saturday morning, February 1st. After a particularly brutal week in the market, I'm going to spend a little bit of time on market analysis in HGSI because this program gives us insights that you really don't get in other programs. But before I do that, I want to make sure that your settings are going to match my settings, because I get feedback and I listen, I observe in the Skype board and so on, and I see where people are having problems. They're not getting the results that I'm getting. And it's generally because the program is not set up correctly. I'm going to click on Preferences, and I'm going to go to Global Index Options. Now, I decided several years ago to use a relative start date starting Friday this week, but going back 104 weeks rather than 52. And the reason I did that is I wanted to see the group indicator appear for a longer period of time when I'm doing analysis. And also I went from equal dollar weighted to market value weighted to give more emphasis to the larger cap institutional stocks. So these settings are what I use. Make sure this is clicked. Don't use deferred index building. It's something that was tried and isn't necessary. I'm going to click on cancel. Another thing you need to do is you need to go into the designer and you need to click on your file menu and go to manage group subscriptions. Now when the programs ship, for some reason these are not check these smart groups, and the reason is I think for processing time, but they take very little time to process. So just go in here, select check all, and then I deselect Larry Connors because that's an ETF trading program which is built into HGSI. I believe it's a mean reversion program. And I just don't use it. But if you want to leave that check, fine. It doesn't take any time to update anyway. And then that's something maybe we can look into in the future. It's in the program, but I just don't use it. So I click on that, and what you will see when you say OK, it's going to rebuild those smart groups for you. So you're going to have all the smart groups. And this is important because several of my scans refer to these smart groups. For example, let me see if I can do this quickly. Bring up the warehouse views, which are already up. And I'm going to search for, I'll just type in the word moving. Matt put this search in not too long ago. But what that does is it just isolates stocks and groups moving up smart group. And you can see I'm in the major markets folder, a plus folder here. But if I hold my alternate, I'm sorry, I hit the wrong key. Hold my alternate key and space bar, it takes me to all securities. And then I reapply the filter, and you'll notice that stocks and groups moving up smart group appears, and there are 100 securities in here because this filter goes directly to that smart group, which has just been rebuilt. Now, a friend of mine was getting one or two stocks with this scan, and I knew immediately what was wrong with it, that managing the smart groups had not been set up in his program, so he was not getting any of this information. So it's crucial that before you start, if you're a newbie or if you're somebody who's been using the program for a while like he has, that you go in and make those changes. I closed my program accidentally, so I'm going to set this up. We're going to do some quick market analysis, and then I'm going to talk about some other things. I'm preparing to do a new webinar series. I believe that I'm going to, let me bring this up right now. I think I'm going to start on the 11th, which is a week from this Tuesday. We're going to do it on Tuesday and Thursdays, and it's going to run from 2:30 to 3:30, and we'll go 10 or 12 weeks or whatever it takes, and it's going to have a heavy emphasis on volume price analysis, volume spread analysis, whatever you want to call it. And it's going to be a lot about chart reading, because I've noticed being on the board that people take unnecessarily large losses or wait for stops to be hit, and that isn't necessary if we can see where the stock is changing its character. So there's going to be a lot of emphasis on that, and we'll do a lot of chart reading, take some positions if we see things we like, and there'll be a great deal of emphasis on risk control using my risk spreadsheets, which I'm going to have updated by then. Anyway, let me get into some market analysis. I'm going to choose my groups. Now, if you're using my files, and you have to be, I go down to my market analysis user groups, okay? And then I need to get a view in here which is going to let these things pass. And I'm going to click on top-down analysis major markets plus. And I'll open this up and go to Major Markets Plus, which is the first folder. And what this does, when I sort on raw combo, it tells me the biggest percentage price moves on Friday. And as you would expect, the VIX moved up the most. It moved up 21.6%. So there's a lot of fear being built into this market. Now I'm going to bring up my top-down process, Major Markets Plus. I'm sorry, I'm talking and not watching what I'm doing. I'm going to get into my market charts, and I'll use the NASDAQ internals for the first view. Now, I just put a chart in this morning. Let's see, this is set on weekly. This is set on weekly. Now, if you when you download the add-on, you're going to have a chart here with expansion, contraction. This has a lot to do with volume price analysis, because we're looking for stocks that are either in expansion mode, and this just let me get to my I haven't I'm doing too much talking and not enough observing. Market analysis user groups. I need to go to my Major Markets Plus here, and I'm going to bring up the NASDAQ composite. Okay, so what this does is it gives us insight into what is happening with expansion contraction. And you can see that the NASDAQ here for a long period of time was expanding when the micro trend, the 3, was above the 6. And you can see that it was losing momentum here. It's easier to see here than here. And this is the short-term trend, the 6 versus the 18. This is volume with pocket pivots, both positive and negative. And this is a volume point of control. Now, as we go along with our stock analysis and market analysis, you can see that there was a negative pocket pivot here as the NASDAQ was losing momentum, and the volume point of control went from positive to negative. This is a very sensitive indicator, and it will generally fire first when things are changing. It doesn't always work. Nothing works. But I was thinking I got up very early this morning. I started thinking about this. We need more insight, and that's why I came up with the chart. So those of you who are members of the Insider Club, you can download the add-on, and you're going to have that chart. Okay, let's get over here to the NASDAQ. Yes, you can see what's going on here, but when you combine it with this over here, we have a lot more insight. You can see that the contraction much more clearly, that it's losing momentum. So I added that this morning, and it's going to be very useful for stock analysis as we get into the webinar series. Okay, let's get back to the market analysis. We know that this brutal sell-off is hurting. I mean, we're not that far down from the 52-week high. I put this chart in not long ago. It shows, if you click on this, it shows that we're down. If you look down here, we're down 3.2% from the 52-week high on the NASDAQ composite. That's not bad, but it's the individual stocks are what's painful if they're going down, and you all know that. Yeah, there are exceptions that stocks that have really reported good earnings are moving up, but I'm going to talk a little bit about that too in this video, I hope. Let me get back to this. I'm going to look at the new highs, new lows. You can see that the new highs versus the new lows in the NASDAQ, as the market was going up, it rolled over here, and this indicator showed us right here that the new highs were falling off dramatically. And next I look at the Ian's multiple chart indicator, and you can see that there have been 3 Hindenburgs generated on this. Now there are multiple versions of this chart. I am using this one, but the data that comes with bar chart, which is our data provider, it is also good for looking at these Hindenburgs. If you don't know what a Hindenburg is, there will be plenty of talk. A lot of the times these signals don't work, so I'm really skeptical about the Hindenburg anymore, but it's just another warning sign. So I look at this, you can see that the bongo, which is a long-term internal relative strength indicator developed by a bunch of guys from HGSI, I was not involved in that project. It's saying the market is still strong, but the short-term version of that turned negative back here. The force index 2 and 13 turned negative. Bollinger ribbon, which I don't pay a lot of attention to, turned negative, and the bandwidth and so on. These were EN indicators. I just don't pay a lot of attention to those, but I do look at the Hindenburgs. Now let's go back up and let's repeat this process with the NYSE. I look at both of these, and the NYSE is showing Hindenburgs, and I'll just reverse my process here, or go back up. Look at this. You look down here. I didn't point this out earlier, but this is advancing versus declining stocks. You can see that it was a brutal day. If you want more information, hit your alternate I key, and it takes you down here, and it shows you the number of advancing stocks versus declining stocks, and advancing volume versus declining volume. New highs versus new lows, the ARMS index, which I pay very little attention to anymore. But it's in there. Some people look at it. Okay, let's move on. Now, what I find very useful is HGSI's ability to create market indexes. And remember, I do it for 2 years or 104 weeks. And that is where I move next. I just choose the group, and I go into the broad market indices. And these are all indexes which are created by HGS Investor. And then I open up my quick pick, close market charts, and I go to the HGSI index charts. And then I'll bring up an index. And these are indexes, like I said, that are created by HGSI going back 2 years. So the first chart that I brought up is the chart that had the highest percentage price change yesterday. It was negative, but relative to all of the other charts, it's showing strength. I'm going to remove the crosshair for now. Let's just run down some of these. Mid-cap institutional index you can see, oh, well, let me go back to the first one. The A's accumulation have been coming down to meet the E's. These are the extremes. A&E accumulation distribution crossover hasn't crossed over yet. Let's go to the next view, the mid caps, and you can see that the mid caps, and by the way, these are indexes that I change monthly. It shows, it creates indexes from institutional stocks that have at least a 50% institutional sponsorship, and I do the well, let me sort on this. No, it's easier to sort all stocks, large cap, mid cap, and small cap. So we get a real flavor for this, and you can see that the A's have gone below the E's, so plenty of distribution going on here. And looking over here, you can see that this is a useful chart on the new chart that I put in there, and I may rearrange these charts in the filter the way they're set up here, but this, I wanted to get this out to you today. So let's just, I'm going to change to the all stocks institutional, so we can see what the institutional stocks are doing based upon a 50% ownership. And negative, negative. This next view shows all of the accumulation views. Here's the E's going up. You can see money flowing out of the A's, the B's, flowing into the C's, into the D's, and into the E's. So distribution going on, no question about it. And this is the Chaikin indicator. This is more of a long-term indicator. If you wait for Chaikin to go negative on a 21-day money flow, you're going to get killed. But anyway, it's in here. It shows accumulation. These are A's, these are B's. A long run, slip down to C, and it's still B here because this is a lagging indicator. Now this is accumulation distribution based upon the velocity, percent AD velocity, and so on. And you can see it's turning down here. But Chaikin's pretty worthless in a situation like this, but it will help keep you on the right side of the market over the longer term. Let's go to the index advanced decline line, and you can see that it has broken down to this over here, whatever index you're on. It tells you the number of advancers versus decliners. This number 0.10 means it was a 10-to-1 down day for the institutional index. That means for every stock going up, there were 10 that were going down. So pretty brutal. Let's go to the next view. This shows the percent of stocks above their 20, 30, 50, and 200-day moving averages, and you can see that this has fallen off precipitously. Now I'm going to zoom out on this, and this is one where you put your crosshair back on and you compare it to the past. And during a strong market, you're going to have a lot of stocks above their 20 and above their 30, and you can see that that's totally changed. And above the 50, the 200 is more of a long-term view, and it is even starting to turn negative now. This is a chart that I probably developed 10 years ago, maybe more. When Ian and I were working together, I thought, well, let's combine some indicators into a chart. And this is a 1 to 3. If it's 1 to 3 positive, or if it's 1 to 3 positive, it's going to be a light green. If it's 1 to 5 positive or greater, if it's between these two, it's going to be between 3 and 5. If it's above more than 5 to 1, it's going to be dark green. So this is 3 to 1 up on both the advanced. Well, let's make this big so we can read it. Advances, declines, compared to decliners 5 to 1 and 3 to 1. It's pretty self-explanatory. So the other day, the force index turned green, and it was a 3 to 1, between a 3 to 1 and a 5 to 1 day on this bar right here. But it didn't get beyond that, and then yesterday, you can see that it was more than a 5 to 1 down day, and we know that it was a 10 to 1 down day. And the force index 13, force index 2, and the volume point of control were all red, so consequently it generates a potential sell. I say potential because in this business nothing is certain. But it's a very useful chart. I like it. I look at it all the time on the indexes. Let's just go down to the all NASDAQ. And then let's look at the S&P 1500, which is a broad measure of the stock market. Contains the large cap, mid cap, and small caps, and you can see that it fired back here. These signals were good on the S&P, and it didn't really reverse it. Because to reverse it, these would all have to turn green, like they did back in this area right here. So here's your warning signal. Right here. We know that. I mean, it's a very painful day. Okay, let's go back up to the institutional. I'm just going to run through a few more of these. This is the percent index advanced decline line is going down. This is a percent above the 50. This is advancing versus declining. It gives you the ratio 0.67 on this, so well below a 10 to 1 on this, negative 10 to 1. So there's a lot of information I just put in this chart. Make it larger, it might be easier to read. But you can look at all this information. Shows you the accumulation breakdown. AD letter rank is still B. And this shows you what percent of the index is under accumulation. This shows you the VPF or the VPA trends that Matt built into the program. Long term is still positive, but medium and short term are down. And this minus 33 tells us that 2 of these are down. Now this next chart shows you when there is a 3 and 6 day crossover to the downside. And let's see, what day was that? The 24th. And this is the 24th here. Corresponds to this view right over here. This is the McClellan Oscillator. I think I missed a chart here. Oh, maybe not. Anyway, down day 3 cross the 6. McClellan Oscillator, somebody asked me to put this in. It is a right here is just right mouse click and you can read what it is. It's a breadth indicator, the difference of the 19 EMA and the 39 EMA of the differences of advancing and declining issues. This indicator's been around a long time. Seems to do a pretty good job. You can see that it's down in its lower range now. When it gets down in here, it's generally oversold. Another reason I do 2 years is so I can get a longer look at these. And this window up here, and let me zoom back in here. It's kind of hard to read because it gives more emphasis to the upside than the downside, but it works. And if you put your cursor on there and hit the key and open this window up, the index, it's red Index arms indicator is the relationship between advancing and declining issues, and it's under 10 or 0.10, so it tells you that it is a 10 to 1 down day. Now if I go back over here, what's nice about this is if you move your cursor and go back to this day, it will give me the relationship on that day, and it was a 5 to 1 up day, which corresponds to that chart that I showed you earlier. We go clear back over here, it was a 5 to 1, 5.7, almost 6 to 1 up day. So you can get information about any index and what happened on these days. On a very strong day, you're going to see, a 5 to 1 day at least. On a very weak day, you're going to see just the opposite, 0.09. Let's go back over here to this day. On that day, it was 0.21, so not nearly as bad, but you have to use your cursor to really see what the information was. And let's see if I have any more charts here. This is a chart that I put in not long ago, and I call it Accumulation Acceleration. Notice there's no shaking. Much clearer indicator when you have these dark green bars. It's telling you there is accumulation going on based upon these the percent AD and the percent AD velocity only. Here's an ABCD ribbon of accumulation. So this is moving up nicely, and we didn't get a distribution line until here. It's a little bit late coming, but these green bars indicate that the index, in this case the all stocks, was under accumulation. Okay, so I don't want this video to get too long. It's already 27 minutes, so I was going to go over some other things, but I'm not going to do it. I'm going to let you play with these charts. You'll find this chart at number 8 under the Williams volume spread analysis charts. This is the thin version. Here's the thick version. Whatever you prefer. I put both sets in here to accommodate different monitor resolutions and different eyesight issues. So these are all things I'm going to cover in depth when we get into the webinar series. By the way, if you want to start signing up for the webinars, I'll show it to you here in a second. But this is the deal in the webinars. If you're new to HGSI, and if this is your first time, well, here, I'll bring up the, it's just hgsinvestor.com. This is just a very basic sign-up sheet. I'm not a web designer, and I don't want to take the time to do it. My time is better spent on HGSI. Anyway, if you're a first-timer, and you have to be a member of the Insider Club for any of these. You can't just come and take the webinar and not be a member of the Insider Club. If you are, I guess you can still come, but you're going to pay $100 more, so it doesn't make any sense not to be a member. You can sign up for the $25 membership per month. I don't care. Or you can pay $200 and get a much better deal for the year. But if you want to attend, if you're a first-timer, sign up for the Insider Club for $25 a month. Then you can attend first time for $4.95. If you have attended previous webinars and paid the $4.95, then every other webinar series, and I do one a year. I may do 2 this year. Since most of you know I've got multiple myeloma, and I had infusions for 3 years, but I'm on a different program now, and I'm doing really well. So I may do 2 this year. It just depends on what changes I make to the program. But if you've attended previously, just click on Add to Cart. It'll take you to the PayPal site, PayPal checkout, or you can check out with a credit card if you don't have a PayPal account. And it's only $100, which is a bargain. So that's the way it is. I'm going to remove that from my cart, and I'm going to go back if I can. If I can't, I'm going to go to hgsinvestor.com, and here is the page. So you can start signing up today if you want to. No hurry, because I'm not going to start for over a week, but this way I can judge how much interest there is. If I get 3 people, I'm going to do it. Why? Because I do it for myself, just like Jeffrey does, more than for anybody else. And every session will be recorded. There will be some other materials. I'm not going to spend a lot of time creating graphs and so on, because the hands-on in HGSI is the most important. Anyway, thank you for listening. Monday, there's a good chance it's going to be brutal, but we're going to do what the charts tell us at the end of the day, or even intraday. So I'll be online on Skype. Join our Skype group. If you're an HGSI subscriber, you can join the Skype group, and there's always a decent commentary on there. Very few people are active. Most people lurk, as they do on most boards, but it's still worthwhile. Thank you for listening. Have a good weekend, and enjoy the Super Bowl if you're a football fan.